So, today on the show, we're going to talk about how to hold your accountant accountable. And that can mean a variety of different things. But I want to address the situation that you're probably going through where there's some type of misalignment. Your accountant is not quite doing what you told them to do or what you think you paid them to do. And you're feeling a slight discomfort with the fact that I'm not really sure if I'm getting what I'm paying for. And I'm not really sure if I even ordered the right thing. And God forbid, I'm not even sure if what they're doing is legal. So we're going to address all of these types of things on the show today. So number one is the most common instance of this, the most common cause for this feeling of discomfort, understand, is the lack of an honest and open conversation. So the first thing you should be doing if you feel any sort of way about who you've hired as your accountant, your tax pro, is to have an open dialogue with them and have a professional conversation. Something to the effect of, hey, accountant, I've just been feeling lately like I'm not really sure if I'm getting the full service that I engaged you to do. I would like to review our engagement letter. I'd like to fully understand what expectations I may have that aren't being fulfilled, and vice versa. I want to make sure I'm understanding exactly what expectations there are of each of us to ensure the most success. And if you do that, there's almost a zero chance that they'll react in a negative way. And if they do, that probably says enough. But what you should focus on is if you have this conversation and maybe you misunderstood or there's a miscommunication, acknowledge that that can happen and acknowledge that, of course, you're not the expert. We don't expect you to be. And we should be communicating as accountants. We should be communicating our expectations really clearly. But admittedly, guys, not every accountant is really good at communicating. Traditionally and stereotypically, these are analytical introverts. So they typically don't know how to leverage EQ and communication styles and other things to talk to you, and understand that's where they're coming from. So it's not the right answer, but it's also just be empathetic to the fact that this may be someone whose personality doesn't really align with being super forthcoming and wanting to have conversations all the time with you. And that's also a factor, by the way, is matchmaking yourself to the right accountant from a person standpoint. So if you really do value that responsiveness, if you really do value having somebody who's going to be proactive and kind of be on top of everything, you're going to want to put that out there when you're hiring someone and evaluate on that. Side note, I actually have something to help you with that. It's called the Money Pro Matchmaker. I'm going to make sure there's a link in the show notes too, but the Money Pro Matchmaker is amazing because I give you interview questions. I give you ways to evaluate your accountant to see if you're a good match and to find the right professional for you. So let's assume that you found the right professional for you in terms of the right service level and perhaps the right personality, but you're just not quite sure if what they're doing is correct. You're not really sure how to evaluate them. So now you're thinking, okay, I love this person, but I don't know if they really know what they're doing. And I don't really know if what they're doing is correct. So there are a couple of things you can do without really undermining them. Number one is you can have honest conversations around questioning and challenging them. Now, typically, accountants that don't have a massive ego are open to this. I'm very open to this. My clients ask me questions all the time, and I go, oh, yeah, that's a good point. I'm going to look into that for you. But here's what I need to ask you guys to do as business owners. Understand that we are not a walking encyclopedia of everything in every scenario. We are doing our best, given the resources we have at our disposal and the things that we're conscious of. But as much as we are researching everything too, if you have any knowledge or any tips from people, we actually appreciate that. I appreciate that, to find out that you're also researching and reading up on this stuff too and gaining knowledge as a business owner. Now, I don't expect you to do all of this. I expect you to rely on me for my expertise, but understand we're also human and we will miss things. We will, forget about a certain tax law in this thousands and thousands of page code. It's okay. You have to also be forgiving at the fact that they are human and that they are trying. So I would not hold them so accountable to the point where if they miss a tiny detail that you're going to fire them over it. Now, if this happens time and time again with bigger and bigger issues, that's different. But please be forgiving for the little things that pop up if they maybe forgot a tiny detail or if they make a tiny error. And that's what I'm going to talk about next. Let's say your accountant makes an error on your financial statements. Here are the ways that you can handle it in case you don't know. So number one is if they made an error that is relatively small. Like your address is wrong, or well, I say relatively small. It's not like a massive $100,000 error, but like your address is wrong, a number that was entered in the return is wrong, but in a smaller magnitude, or you just find a little detail that you missed when you were reviewing. No sweat. So here's how we treat this with our clients, and this is what I would honestly expect accountants to do, in my opinion. So take this for what it's worth. If I find an error or you find an error as my client with something I did, again, human. If I transpose a couple numbers and something comes out slightly wrong, what we do is we have a conversation and we say, hey, is it worth amending the return? Like, is it worth fixing the return and submitting a new copy? Or is it minor enough where it doesn't really matter? Or we could wait until a discrepancy pops up to actually react to it, where it's like $8-9 or 10 or 12 bucks, like something small. I would say it's not really worth it. So you have to understand the magnitude and the impact of that mistake. And then you'll know kind of how to react to it and work together to resolve it. The other thing is, if you find a bigger mistake, then you may want to amend it. And honestly, if the IRS finds the mistake, this is a big thing, the IRS or the state agency, if they find a mistake or they notice a discrepancy and send you a notice and it says, hey, we noticed that you should have claimed more income than you did. What we will do, and I mean my company, what we will do is we will research it. We will go back and say, okay, who is right? Because by the way, the agency is not always right. So don't jump to conclusions if you get a notice. Don't jump to conclusions to say, oh my God, my accountant screwed up. Trust me, the agencies screw up on their own and can't do math sometimes. I'm telling you. So make sure we're going to check it for you. So what we do is included in our service is this correspondence review. So we'll go look at it and we'll say, okay, turns out, Sally, the IRS was right and we made a small mistake on your return. What we do is we say, okay, that was due to us. That's an oopsie. Sorry. And we will correct it. We will correspond with the agency. We will, amend or whatever we have to do free of charge to you because we made the mistake. We are culpable. So we say, hey, sorry about that. Human, again, we'll fix it for you. Now, you will have to pay the taxes if you owe additional taxes. But what we typically do is we will typically pay the penalties and interest or any other fees associated with the fact that it was wrong. So whatever money you have been penalized with because it was wrong, as opposed to the money you would have paid if it was right. Okay, so if you had to pay another $300 in taxes because of leaving out income, well, that's just a fact of life. Like if we had done it correctly, you would have paid that $300 back then. So that's not really because it was wrong. That's what you should have paid. So we're going to have you pay that. However, if you got another like $20 in penalties because of that, we're going to cover that for you. Make sense? So that's typically what I would expect, honestly. Every accountant has their own policy on this, but I kind of think that's fair, that if it was because of our mistake, that we'll own up to it and we'll eat the penalties and interest. It also keeps us as accountants motivated to do things right because we know we are truly accountable financially to this. So that being said, let's say you find a bigger error and your accountant doesn't want to fix it, doesn't want to address it, or this is a former accountant you can't get in touch with, whatever. We have this thing in our profession called professional liability insurance, or what's called errors and omissions insurance. E&O, we call it, errors and omissions. And what that is designed to do is to cover us if we are approached, maybe we're sued or we're approached by a former client or a current client that says, hey, you goofed up on my return and it caused this much damage to me. I want to make a claim against your E&O insurance. That is a possibility, by the way. And I'm not telling you to go rampant and go make claims against your provider's E&O insurance policy. No. That actually does a lot of damage to us. But just understand that the first line of defense is always going to be to have a conversation and understand the true impact of what happened. You can also talk to another accountant to do a review of what they did, maybe do a peer review. And then that way you can determine, oh, okay, it was my misunderstanding, or this person made a minor mistake, or here's what all is involved here. And yeah, it takes some time and work. It's going to, because if you want it done right, you're going to have to put the time in to evaluate your accountant on the front end, or if they make a mistake, you're going to have to deal with it on the back end. So one way or another, it's going to cost you some time to make sure your accountant is doing things right. And just to reiterate, it is not your responsibility to audit your accountant or to make sure they're doing every little thing correctly. It is what you're paying them for. I completely agree. However, what I'm trying to get across is that there are ways to resolve discrepancies or issues or errors in a very easy way, in a very professional way, without, kind of chalking it up to this is just what happens and eating the fees and eating the penalties. I've seen so many entrepreneurs that I've worked with who were victims of accountants who either did something maliciously or did something where they made a huge error, a huge issue came up on their return. And the business owner, the client, was too afraid to go back to them and say, hey, you goofed. I need some money for this. They were afraid to go back and do that. And they just kind of said, well, hands in the air. It is what it is. I guess I just lost all that money. And my response to you, and part of why I'm sending this message out, is to say, like, no, you don't have to do that. And it doesn't have to cost you your peace and your energy. It doesn't have to cost you, peace of mind. It can be as simple as engaging the right people to help you to get what's yours back. And it is as simple as going to the accountant, going to the tax pro and saying, hey, I am not completely satisfied with what you did, and I would like a partial refund. I would like this. I would like that. You don't have to jump right to suing them. You can just go and say, hey, I am dissatisfied. I would like a refund for this. I would like that. Now, here's where I would say call a lawyer if you are in this position. I'm not going to give legal advice. None of this is legal advice. I'm not saying to sue or not to sue somebody. What I am saying is you may want to consider simple paths of expressing dissatisfaction as a customer before you go the lawsuit route and then spend a ton of time and money in resolving this issue. So my best advice is, as always, have a conversation, talk to your accountant, talk to the person. And if you are not on amicable terms, then you may want to hire someone new, have them evaluate what you should do, talk to a lawyer, and figure out the next steps that way. But if you're in this position, I'm so sorry, because I truly believe fundamentally that no one deserves to be in this type of position with their accountant, and nobody should be, distrusting our profession or contributing to that distrust as a professional. I don't like it. I don't like it when I see it, but I want you to know as a business owner that you have options, that most of us, vast majority of us, are here for you. We abide to an ethical code of conduct. We are here to help you, and we want you to trust us. So in that, here are some options with this episode on how you can actually hold your accountant accountable and make sure you are not, flushing money away just because somebody else made a mistake.